Thank you, and good afternoon, everyone. It's lovely to be here with all of you. I'm from South Africa, and I've been leading the Edge Green Building program across Africa. So our conversation this morning, or this afternoon, is about ESG and unpacking real returns. Some of the concerns we often hear is about, does it really make business sense to focus on ESG, and is there really an upside to doing this? So with my esteemed panelists, we'll go through a discussion on this and look at what do we mean by ESG, that's environment, social, and governance. How does this impact your capex and your ROI or your return on investments? How African developers are leading the charge in terms of real success stories across the continent, and how green finance is unlocking new growth opportunities. So to start off the conversation, we'll look at some of the concerns we often hear from investors or management is ESG too expensive? And some believe that it's not really necessary. So to begin the conversation, Donald, how do you address concerns about upfront ESG costs when pitching to investors or to boards?
Okay. Good morning, everybody. Yeah, thanks very much. I think what we found now, it's I'm not going to say it's mature, but it's been around long enough that we're pretty much at the point where we don't see a huge premium for getting certainly green buildings, and the other elements of ESG are now kind of just completely normal. So I think the days maybe 10 years ago there was a huge pushback. There seemed to be a big premium, and now we don't see that. Yeah. So we're seeing a very big benefit, and the cost. Yes, if you're going into some of the very technical evaluations, there can be a bit of a premium if you're in a remote place. But generally we're seeing that you can get the green design done without a big premium. Yeah. So for us, it's just absolutely normal now.
Okay, great. And then Matthew, maybe you could take us into, have you seen any measurable returns in terms of operational or leasing or resale from any of your ESG investments from Acorn Sign?
Thanks. Yeah, so I think just picking up from what Donald was saying is that if you have ESG sometimes does make sense when you're building at scale, because then you can translate those costs to the bottom, right? Because then if you're embedding the cost, especially on your EDGE certifications and things like that, and designing at scale, then that makes sense. What we've seen is when I look at this, we have two REITs, a development REIT and an income REIT. When I look at 7-8 years ago, the seeded assets themselves, when I look at the cost of operating those assets, especially on energy consumption in itself, and now when we've embedded solar across all our properties, you're seeing some significant savings. So OPEX margins, I think back then, about 35%, north of that. Today you're seeing OPEX margins as low as 25%. Because student housing is like running a hotel. The energy consumption is highest during the day, not at night. So if your bigger bulk of energy consumption is from solar during the day, and you're dropping that from cost perspective, you're seeing that coming through to NOI and ultimately to investor returns. So similarly as well, when you embed a lot of initiatives on water consumptions, and for us, it's student-led. And the students are the ones which are embedding those efficiencies themselves and driving the element of that in itself, including simple things like water harvesting when it's raining, right? And you're seeing that efficiency coming through from an NOI perspective, and your NOI margins are increasing. So yes, so we've seen significantly 7 years out today, it's light and day. it makes a lot of sense. And you've seen that all across our properties, designing green, through the whole ecosystem to operating green, you're seeing a significant reduction in OPEX.
Great, thanks. And from your side, Momo, maybe you could touch on, from a social perspective, are you seeing any benefits and what those might be from your developments? How are you tackling the social aspects? Because that's something that was raised earlier this morning, that ESG has evolved from focusing mostly on just the E, the environmental aspect, to coming more into the social. So maybe you can take us into that.
Yeah, sure. Thank you. Thank you for that question. And yeah, so I think as Mivida, we've always tried to partner with, on the social side, with TVET institutions that help, train up and skill up laborers from, on the contracting side, whether it's on plumbing or masonry or plastering, and get them actual formal certification. And what that helps us with is we're then able to bring them on board on some of our construction projects, and helps with quality as well. From a brand equity perspective, being able to demonstrate that you are upskilling Kenyans, and also from a construction perspective, I think one thing that goes with the social aspect is also on the health and safety on our construction sites. Being able to demonstrate that you are a safe environment for the people who are actually building, to the market, and to financiers and to other partners, really does help sort of bring on board these kind of discussions. So there is a value to it, leave alone just doing the right thing, but there is a lot of value in the social aspects of ESG, for sure.
Yeah, and thanks for that. So maybe you could also take us into some of those social aspects that you might be touching on, Matthew, from the student accommodation perspective.
I think from a PBSA perspective, I think it's similar to what Mivida is doing on a development perspective. I think skilling and upskilling, and some of the things that we've seen is even embedding, health and safety 10 years out here wasn't a big thing. So health and safety now, when you look at from a development perspective, simple things from a community perspective, because we tend to employ the bulk of our labor within the areas in which we're developing. So ensuring that at least the bulk of them, you're paying them, they are skilling the community and things like that. And we've seen a lot of improvement as well from a development perspective, where if you look at things like injury rates, work at height, just the basic stuff, like people wouldn't even know how to use safety equipment. So that skilling of communities and things like that is very critical for us from a dairy perspective. I think as well, embedding from a social perspective, from a student perspective, we're seeing a lot of students within the universities in which we are also we're developing close to, is we have this sort of study work program where some of those qualifying students, we get to absorb them as well from our perspective, give them employment, and ensure that from a community perspective, we're helping them. And also just sourcing. From a procurement perspective, we made a decision that we want to benefit the community around. That as we source, as we procure, because we do that in bulk, how much of that is also impacting the community from downscale. So you look at that from the entire ecosystem, from a development, from an operational perspective.
Thanks for that. And Donald, from your perspective, GRIT has had some very interesting programs, I think, on the social side. Maybe if you could talk a bit about that, and also I think you've had some programs that have involved helping women and upskilling women in construction as part of your initiatives, and those are quite interesting as well.
Yes, thanks very much. Yeah, so I think the program you're talking about is called Build Her, and that's been fabulous. My colleague Pumi sitting over there has been very involved in that. And this is essentially getting women into the construction workforce, which has been a kind of a tough, traditionally male-oriented maybe fundamentally unpleasant place, depending how you look at it, but getting ladies in and then upskilling. And it's just been tremendous to see what happens. I mean, the people are becoming on the way to being fundis, their salaries, their wages increase tremendously, and they stay in employment. Many of them have stayed working for the contractors, but others have gone off to set up their own businesses. So that's been fantastic. The other thing that I just think is important, and it's like not a metric maybe that you pick up anywhere. When we've done very technical buildings or where we've really pushed the envelope, there's a pride in all the people that have worked on the project. I think of a data center in Lagos, where you're in an environment where the safety levels had to be picked up tremendously and the quality, the sort of the commissioning processes. And I would say every single person who worked on that project came out of it just so proud of what they'd achieved. And I think we've seen the same thing with the big housing project here. So yeah, that's something for me. I think it's fantastic. And you just know it. You can just see it in people's faces on site. So,
yeah, I think you raised a great point that whomever you're impacting, it's not just those who are working on the construction site, but it's the broader community. It's the community that those workers may come from, but also whoever is going to be living in the buildings that you're creating. So you have a much wider impact, and it's wonderful to see some of these initiatives and how that positive impact is rippling out to the broader society. Now, just moving on to some of the African success stories. Momo, perhaps you could start us off with this conversation. Can you give us a quick snapshot of a project where ESG made a real difference?
Yeah, sure. Thank you. I think maybe the highlight for us was being able to close a B2B turnkey acquisition for roughly 200 units on one of our projects. That was heavily centered on our ability to understand each other, the two parties, on matters ESG, especially on the environment and social aspects, where there was a meeting of minds. And, being able to sit across the room and discuss, their requirements and for us to understand them. And be able to navigate them and actually bring a success story to them in terms of achieving what were at the time stringent savings requirements on energy and water and materials. I think we pushed the envelope. Typically, we normally do 20% savings on energy, water, and so, but this time we were able to push it up 35%, just working with each other. And I think our ability to have that conversation really helped us close that transaction, which has been massive. And what that has done is open up the door to other institutions that were looking for that kind of partnership with Mivida, because they can then see that, okay, these are like-minded people, institutions that they can actually transact with. So that has been massive. Over and above that, I think the general market now is also, more and more in terms of just retail buyers who are a big chunk of our customers who are buying apartments. Now there's a lot of them asking about what green facilities you're putting up in your projects, and being able to demonstrate that, we are doing it actually helps them feel comfortable about acquiring a project with the institution that seems to be responsible in that sense. They're also obviously looking for, at the end of the day, what impact it has on their pockets. And so if we're able to demonstrate, and we are, that service charge numbers go down because we have all these sort of sustainability features in the projects, their end user cost is also going to reduce relative to developments around the neighborhood. So that obviously just keeps building up more and more, and referrals become our biggest channel of sales. And a lot of it is to do with the quality of the scheme and the things that we bring into the project. So, yeah.
Thanks for that, Momo. Now I'd like to move a bit on to green finance and how that has changed the landscape. From your perspective, Matthew, maybe you can take us through the journey you had and some successes that you've had in terms of being able to access finance by prioritizing green.
So we did a green bond in 2019. I think at that time we had just shy of 3,000 beds that had been built and operational seeded assets, non-typical for our brand Kwetu and Kijani. I know you've seen those Kwetu properties. So we did a green bond. It was a fast project-linked bond. The mechanics of that were you would do a on-demand drawdown, ensuring also that you're also saving quite a bit of the upfront interest costs. $50 million. We did a $40 million 2019, upsized that to 50 in 2021, just showcasing that there is demand for green financing. The green bond financed development of 8 projects, with the last of them being the behemoth Chiromo property next to along Riverside Drive. And so what we saw is that the demands of the investors, especially on design, develop, operate green, we saw that access to green financing enabled us, develop those projects because we develop with 65% debt, 35% equity. And even from an equity perspective, we've aggregated from local fund managers specifically focused on ESG investing and sustainability an additional $60 million. Pure equity just coming through from that perspective. If you look at the partnership that we've done as well with a local bank, ABSA, is that they're financing another 10 development projects purely on greening of assets. So you're seeing significant capital and a shift towards sustainable financing. We've seen the success story. There's a lot of requests for us to do another green bond, but obviously that's something that we'll see as we scale in country and out of country, whether that model is what we want to go through. But today we have a portfolio of 21,000 beds, green assets financed by the green bond, and also from an ABSA perspective, it's still green financing as well. So you're seeing, even from a global investor perspective, that aspect of designing, operating green, on-demand green financing is coming through, and it's something that other developers can look at and consider going forward.
Thanks. And I think that having that kind of flexibility where you didn't have to pay the costs for, you would only draw down when you actually needed it for a project, that gave you flexibility, and also you weren't incurring that additional cost of having like a commitment that was ticking away while you're still trying to develop and to get occupants into the building.
Oh yeah, so the way the bond worked is that the agreement was it was a 5-year bond, 12.5%. First thing it did on development enabled us to manage interest, because that's a big, it wipes out your returns. So first we fix the interest cost. Secondly, we would have frequent drawdowns, which meant that we would only draw down for the project and utilize that capital injection when it's required. Which meant that if I take the $50 million, I incur the interest upfront. But if I draw it down slowly as the projects are being developed, the bigger demand for the projects on cost would be when you're finishing that project. And when you exit the project from a D-REIT to an I-REIT, you would take the principal and repay the principal for the bond. So that mechanics allowed us to draw down in bits, repay on exit, so that by the time the bond was maturing, we retired it ahead of schedule. So that allowed us only to have a smaller quantum of principal remaining to be able even to just pay it off. Mm-hmm. So that was the beauty of structuring it as a project-linked bond with early repayments and structured drawdowns.
Thanks for that. And in general in the markets, we've seen green bonds. We haven't so much seen social bonds come through yet, but that's definitely in the evolution. I know some banks, when they've looked at their issuance programs, they create a framework where they can issue green, social, and sustainability linked bonds. So I think that that's still evolving. So maybe in future we'll see more social bonds that can also address some of the social issues that we have. From your perspective, Donald, what practical advice would you give to developers in being able to access finance if they focus on ESG principles, and maybe illustrate from some of your experiences as well?
Look, for us, it's given us access to DFI funding, which is it's then been backed up and supported by the commercial banks. So I think we've got to acknowledge that for a lot of the countries that we work, the DFIs are the people that are stepping up and really putting the money in. So it's fantastic. They're committed to the ESG, and so for us, it's absolutely critical. And then I think the banks, like the experiences of the guys here, is the same. So it's fantastic. So yes, I would say it's absolutely worth pursuing. It gives you the access to the funding. It's pretty binary. You're either going to do the ESG and comply, or you're not going to get the money. So I don't think it's a question of saying, you can pay more or pay less. You must do it. I think the other thing as well that maybe some of this ESG stuff was originally kind of connected with sort of tree hugging and stuff. We're a profit-making capitalist business, and this stuff does ultimately become serving and self-fulfilling. We get better tenants, we get tenants to stay, we get more rental. On the staff training and stuff, yes, it's fantastic to run these programs, but ultimately it's a huge productivity gain for us. We can get the work done and we can get it done properly. So it really becomes a win-win, which is fabulous.
And have you seen any benefits in terms of being more well-known in the market because of that commitment? Because I know you're also an EDGE champion. How is that also translated?
Yeah, I think it's worked well. I mean, the one we're very proud of is our big head office building, and it's a big building in Mauritius, which got a green 5-star award. And that was very much driven from within the company. We didn't have to do it. I think that's done extremely well. It's quite interesting. I'm sure most of you will have been in these higher-rated green buildings now. It really makes a difference. And some of the technical stuff is quite strange. Like the air conditioning needs to be quieter. And it's extraordinary when you are in one of those buildings, you really do get the benefit. Without getting into all the weeds of how it's evaluated. Sure. They are just much nicer places to work.
Yeah, definitely. Just in terms of wrapping up, from your side, Matthew, what kind of advice would you give to developers in terms of prioritizing ESG? What benefits have you seen besides the access to finance? What other benefits have you seen from an Acorn perspective?
Well, I think the key thing, as Donald said earlier, we're not seeing any significant, it costs the same or even cheaper when you design and build green. So they shouldn't shy away from saying, by going green, it's going to cost me more. The reality is, what we're seeing is, when I look at developments we were doing 5 years ago and now, you're doing possibly a 1,500 bed development with ESG at almost the same cost. You were doing an 800 bed development. So I think that's something that you can embed. Secondly is that some of these things like IFC EDGE certification, we have 13 properties, all EDGE certified, 2 EDGE advanced. The access to finance for a lot of those, especially for global investors, is very key, ensuring that many of those global funds have requirements for quotas to meet on sustainability. So that's something very key. Secondly, now if you walk into any commercial bank to finance your construction, the first requirement that we'll put down is ESG. It's a sustainable, it's there. It's the first thing. Yeah, besides giving you the money, ESG is a requirement. I think that there has to be a significant mind shift. It's something that we have to live with. but the benefits are massive. So we've seen a CO2 emission reduction by 16% per bed from when we started incorporating ESG. 5% reduction in carbon intensity. So you're seeing the overall benefit dropping OPEX margin by about 5% in 3 years. That's massive, especially if you're going to translate that NOI return back to distributions on yield. So there are benefits that you embed when you design green, develop green, and operate green, but you will reap the real benefits when you're operating those assets.
Great, thank you. And so maybe to close out, Momo, what advice would you give to developers and from your side?
Tough to come after both Matthew and Donald. I think in terms of advice, they've captured it. But maybe just to say, it is a lot easier to design with the green principles in mind from the onset, rather than go through the headache of retrofitting. So if you can start with that goal in mind and have that as a principle for all your projects, it does help. You don't have to do too much to be able to demonstrate real value in terms of sustainability. The simple things like just making sure there's enough natural light and natural ventilation, which should come as a standard, but in developing markets that doesn't always happen. It really does help. And so, I think the advice is really start early, get it in the design, get it in your mind that you have to do this. It's of a benefit to yourself from a value perspective as a developer, but also to your end users, and your end users will always remember this and will thank you for it with more transactions. So that would be the advice from me. Thank you.
Thanks, Mo. And so just to wrap up, some of the key takeaways are that ESG is not nice to have, it's an imperative. If you want to access financing, especially from the DFIs, we've heard some of the experiences, and also that there are social benefits as well. If you build these principles in, people who are then using the buildings will be taking those messages out into the community, into society as a large, as a whole, and taking and embedding these principles then is part of a broader perspective and a way of doing business. So it's not just that you're doing it because you want to access the capital markets or that you want to access the DFIs, but that you are making this more positive impact on society. And we've seen some of the success examples. In addition, I would also add that some of the benefits are maybe that you can't necessarily always quantify from a financial perspective, but being seen in a leading role from an ESG perspective can improve your brand, and for your brand to be seen as on the leading edge in making those changes and how you can make a positive impact on society. So thanks very much to my esteemed panelists.
Thank you.
And thank you to the audience.